Well, despite Bitcoin's massive volatility over the past year, my next guest says the days of its big crashes are over. ARK Invest founder and CEO Cathie Wood joins me now. Hello, my dear friend. So,
Hi,
listen,
Charlie.
hi, you're always making headlines. You're in the news almost every day, but your most recent call for Bitcoin to be worth $1,250,000 over the next 5 years, I got to be honest, has even some Bitcoin bulls thinking it might be too aggressive. So walk us through this.
Sure. Well, the way we get to that number, now that is our bull case. Our base case is closer to 750,000. But the bull case involves a substitution for gold. So as generational wealth transfer takes place, we think that younger people are more prone to adopting a digital store of value. So that would be Bitcoin. The second is Bitcoin is an insurance policy, particularly in emerging markets, against fiscal and monetary neglect at best or corruption at worst. And so as wealth increases around the world, we think that individuals will shift from stablecoins, and that's been a very interesting development, to Bitcoin, which has much more appreciation potential. But the biggest reason is institutional adoption. That is the biggest. This is a new asset class. It has very low correlation to other asset classes in terms of risks and returns. And so every asset allocator has a responsibility to examine it because it will increase risk-adjusted returns over time.
So you recently did a podcast with your mentor, my friend, Dr. Art Laffer, and a lot of points came up, and they some dovetail with what you just said. We know Art is a sort of a sound dollar kind of guy. We know Bitcoin maximalists see a world where crypto overtakes fiat, to your point. And the transition, I guess, is the question, because it feels like they're going to coexist for a lot longer than people thought. Do you see sort of a hockey stick kind of move when this starts to make its move?
Well, I think that we're beginning to see the asset allocation shift. And yet we think that because of stable coins, that the dollar will also be strong. So effectively, stablecoin, so USDC, Circle stablecoin, and USDT, Tether's stablecoin, they are backed primarily by U.S. treasuries. So to the extent they become successful around the world, we're going to be effectively exporting dollars, and that should be dollar positive. At the same time, we do think there is an asset allocation shift beginning towards Bitcoin and other crypto assets, again, because of the low correlation of returns. In that
podcast, Art had argued for the necessity of a price roll. And, when I started to think about the initial appeal of crypto was that it's unregulated. As you talk about these large institutions coming into the marketplace for Bitcoin, crypto, also doing things on the blockchain, will they demand more regulation?
I think the Genius Act and soon, hopefully, the Clarity Act will set the stage appropriately for this space to flourish and for institutions, especially Clarity. I mean, the administration wants it done by July 4th, our 250th birthday, but I don't know if we'll get there. I think once we do, because the odds have gone up recently that it will be passed, that we will see much more of an institutional swoosh into the space.
So I just saw a survey that suggested a lot more older folks, people over 55, own crypto than we probably thought, and that they are using it, to your point, more as a store of value. But younger folks that are going to, inherit this money are actually using it for everyday purchases, at least a lot more. The argument has always been sort of, hey, promote that part of it as to legitimize it. But it sounds like you think it's much better, obviously, with your targets, for even younger folks to hold on to this.
Absolutely. Absolutely. Yes. 21 million units We're up to 20 million that have been minted. Only 1 more million to go. So the scarcity value is there. And if you look at Bitcoin relative to even gold, gold supply increases at roughly 1% per year. And it might be more than that in the next few years because of what has happened to the price recently.
Right.
Bitcoin is mathematically metered. There will be no supply response. It's just mathematically metered. And right now it's increasing at 0.9% roughly per year. The supply is, which is lower than gold's long term. And in the next 2 years, we'll be down to 0.45% increase per year. So there's real scarcity value evolving now.
So that brings me to this Bitcoin gold comparison, or rivalry, if you will. It felt like we just had this sort of, some economic issues here in this nation and around the world. And it was sort of the moment of truth. It was what Bitcoin was designed for. It was what crypto was designed for. Bitcoin went down and gold erupted higher. And so a lot of people felt maybe that first big moment of truth, when they were ready for the close-up, they weren't ready for the close-up.
Yeah, what's interesting is if you look over time, and I'll say since 2019, when institutions started considering this new asset class, you'll find a very low correlation between gold and Bitcoin, digital gold. Very low correlation. It's 0.14. So almost no correlation. But if you zoom back and you look at a chart, what you will find is in the last two cycles, gold has actually led Bitcoin. So it is very interesting in recent weeks how they've exchanged places. Bitcoin has developed a little bit of momentum. It's certainly in a bottoming out process, and gold has given way. And I think one reason that might continue, gold and the dollar are inversely related. We believe the dollar is going to go up because the return on invested capital here in the United States is rising relative to that in the rest of the world, thanks to deregulation,
Right.
tax cuts, and so forth. So the dollar going up, we believe, is going to be a negative, a slight negative for gold here.
Cathie Wood, you're a legend. I appreciate you. Thank you so much.
Thank you, Charles.
All right,
Great to
see
see
you
you.
soon. You too.